All right, welcome out to tonight's advisory report. It is Tuesday, May 26th, 2026. Hope you had a wonderful 3-day weekend, but we are back at it, looking at the intermediate trend, which is how we start off these videos. You can see that we are in the moment in a green area. This is the S&P 500, and we like to play offense when the S&P 500 is above the 30-week moving average, which is this orange line. We like to play defense when it is below. What I mean by offense and defense is that we will have an offensive bias. And when we have pullbacks, we are looking to buy the dips as long as we are above the 30-week moving average. Take an opposite approach when we're below the 30-week moving average. We're typically playing defense and looking to play more defense when we come up to the 30-week and reject back down. This is the intermediate trend. We make a lot of decisions on our short-term charts. Also, each one of these candlesticks is what we call them, is 1 day's worth of action. Starting at the low of the day and closing at the upper, you'll notice a white body. The opposite, opening at the beginning of the day and closing below that will be a darker candle. You can see that this run off the bottom from March 30th has been an amazing trend up. And we are definitely playing offense. This green line is the 20-day moving average. So the markets ended up today. Again, you can kind of see this is where we were yesterday. This is where we are today. In fact, the S&P 500 measured by the SPX is up 0.61%. And we'll see if that holds. A little bit of a wick here and a wick here the last 2 days. What that means is that it's not the tip top of the day. It got higher and then kind of closed down a little bit, but still up. Overall, you can see our very, very bullish trend gauges over here to the left-hand side. And we are now looking at 7.33% above the 50-day moving average with this as red line. So we are a bit extended and possibly overheating. I mentioned last week that I wouldn't doubt that if we came up and maybe kind of cut back down a little bit, still in the cards, but things are going good right now. I mean, this is a very, very strong trend. Let's go ahead and look at a couple of the positions that we have in our ultra aggressive account, which we play with stocks. A very bad day for Circle. And so this one might be getting kicked out of the portfolio soon. We'll see if it kind of rebounds tomorrow as it found support on the 200-day. That was the worst of them. A very weird day for Lunar. I remember looking at one point, I think this was up over 15% on the day, all the way up here. So this is where we closed yesterday. And then some news came out midday about losing a possible contract to supply some kind of vehicle for the moon or lunar landing to be able to drive around. So that came all the way back down, and then a very bad day, almost to where our stop is, but found support at that 20-day and turned back up. And after hours trading included were about right here, down 6% on the day. So two very bad positions. Now let's go ahead and look at some good ones. XLK, the tech sector ETF, still in that trend and really leading the market right now when you look at the ETFs, the sector ETFs. So that one going into new highs today. Intel looks like it's setting up for higher, finding support down in this area. We'll see if that continues higher. GEV looks like that's starting to try to at least get out of this sort of downtrend and turning back up. Some selling at the end of the day as the market, this thing opened here, came all the way up to this point, came back down. That's 3.3% on the day. Marvell, including after hours action, is up about 7.9% today. So a nice run there. And then we have Micron MU up 20%, including after hours action. And so a very, very strong day for the majority of our stocks in our ultra aggressive, which had the ultra aggressive outperform the S&P 500 by a pretty decent margin. So That's what I got for you today. Take care. Have a wonderful afternoon. We'll be right back at it tomorrow.